Hi, I'm Debi Peverill, and this is our annual How to Fill in the Nova Scotia TD1 form. We have other videos on how to do the federal form and how to do the provincial form for Ontario. So the TD1 form is a piece of paper, 2 pages, that you give to your employer in order for them to know what your situation is, so they take the correct amount of income tax from your pay. The thing about a TD1 form is that it doesn't change your tax return. The things you are entitled to claim on your tax return will be determined at that time. What you're doing on the TD1 form many times is, assuming you're going to get deductions, which may or may not be actually true. So the first part of the TD1 NS form has your name, your address, your social insurance number, and your birthday. All things you should be able to know or find out quickly. Box 1, basic personal amount. This is not straightforward, unfortunately. If your taxable income is going to be lower than $25,000 this year, and you know this, then the number you put in is $11,481. If you know that your income is going to be over $75,000, then the number you put in that form is $8,481. So there's a $3,000 swing between the amount that somebody who makes less than $25,000 can claim and the amount that someone who makes over $75,000 can claim. And the higher income gets a lower deduction. Between those two numbers, between the 25 and the 75, is a $50,000 difference, and this $3,000 is prorated through that. So there's a worksheet you have to fill in just to do the basic amount for Nova Scotia for box number 1. So the example that I've worked with is if your income was $50,000, you're right between. So what you would do is the difference between $75,000 and $50,000 is $25,000. That $25,000 you multiply by 6%, being the amount they just, 6%. So that gives you $1,500. So your base claim then that goes in box 1 is the basic amount, the $8,481 plus the $1,500. So you, if you earn $50,000 in income, would put $9,981 in this box. This does seem very complicated. So a lot of times what people do is they just fill in the $8,481, don't attempt to get the extra $3,000 because if you're over $25,000, you're going to have to prorate it, and that way maybe you get a little bit more of a refund when April 30th comes around. You file your tax return. Okay, that was box 1. Box 2 is the age amount. If you are older than 65 by the end of 2023, and you earn $30,828 or less, the claim you can make here is $4,141. There's a partial claim, of course, it's prorated from income of $30,828 up to income of $58,435, and there's a worksheet for that as well. And this number hasn't been indexed. None of the Nova Scotia numbers are indexed. The federal ones, if you've looked at that video, they've all been indexed from 2022. So Nova Scotia has the same numbers for both years. There's also this age amount supplement. That's box 2.1. And the way that works is if you have less than $25,000 in income in the year, you're going to get an additional amount that you can claim for your age amount, and that is $1,465. So they separated the two things. What your exemption will be for your basic income and what your exemption will be if you're earning less than $25,000. And that amount goes in 2.1. 3 is the pension income. So if you have pension income other than CPP, OAS, or the Guaranteed Income Supplement, then the amount that you can claim is $1,173 on your tax return. Box 4 is tuition. Tuition that you yourself have paid for you yourself going to school, anything after high school. And this works that you can claim an amount, any amount that's over $100, as much as you need to reduce your income. You also have a Nova Scotia credit for every month that you're in school as a full-time student. You get a $200 credit and $60 for any month that you're a part-time student. That only applies provincially. There's no federal counterpart to that. So your own tuition, you need to estimate the amount of tuition plus how many months you're going to be in school. Box 5 is your disability amount. This is a disability tax credit, and you only have that if you filled in the forms, sent them to Canada Revenue Agency, and they've agreed that you're disabled. If you've done that, you'll know it, and that will be the amount that you're going to put on this form is $7,341. If you haven't applied for the disability tax credit, you shouldn't put any amount in box 5. Box 6, your spouse or your common law partner. If you are supporting a person to whom you're married or you have common law status with, then the deduction is $8,481, provided that that spouse lives with you and their income will be $848 or less. So if your spouse has income, then there's a proration for that. Okay? So the way, eventually with the proration, you won't get any deduction for a spouse who has full-time income. This is intended for a spouse where you are supporting them and they don't have any amount of income. Okay, so the max is if they're over $8,481, then there won't be any deduction for that spouse. There's a supplement, that's box 6.1, and the way that works is if your income is under $25,000 and you're supporting a spouse, then there's a supplement. Box 7, eligible dependents. And again, this is one of the boxes where I get more questions than any of the others. So an eligible dependent is a child, generally, who you have and you don't have a spouse. So a single parent is entitled to claim one of their children as a dependent. And I always get the question, why I have 2 children, why can I only claim one? And the answer to that question, of course, is that it's an equivalent to married, and Canadian law only allows one spouse, so it only allows one equivalent to spouse deduction. So this, again, box 7 only applies if you have a child but no spouse. And the same deal. If the child has income, you have to subtract their income from the amount of credit. There's also a supplement for this. If your income is under $25,000, then there's a supplement for you supporting an eligible dependent. Box 8 is the caregiver amount. The caregiver amount is $4,898, and that applies if you're taking care of a dependent who lives with you and their income is less than $13,677. There's a proration on this as well. Between the amount of their income determines how much you can claim for the credit. The more they earn, the less of a credit that you can take. Box 8 is for dependents who are over the age of 18 and not a common law parent, not a common law spouse. So a dependent over the age of 18 goes in box 9, can't be anybody you claimed in box 8. And this is an amount of $2,798 if the dependent lives here with you, they're 18 years of age or older, and they have a net income of less than $5,683. And that's it for the dependents. Box 10, amounts that you anticipate will be claimed by you from your spouse. So if your spouse doesn't have any income and they do have a disability tax credit, or they're over the age of 65, or they have tuition, those amounts can be transferred to you. So you can estimate that and put that in box 10. Box 11 would be amounts transferred from a dependent. So this is where a child who has a disability tax credit but no income can transfer that tax credit to a parent, or a child that has tuition can transfer up to $5,000 of tuition to the parent if the child doesn't need that tuition themselves. So the total goes into box 12, partway down page 2. There are other important things on page 2, one of which is the more than one employer. So if you have more than one employer in a year, you have to be careful filling in the TD1 forms because you don't get these credits twice. You're only going to be able to claim them once on your tax return. So if you have 2 employers and both of them think that they should have a number on your TD1 form, then you're going to end up paying tax when you file your tax return at the end of April because there won't have been enough tax taken off by one of your employers. So there's a box to tick that says that you have 2 employers. So for the first employer that you fill in the form, do it the way I've just explained it. The second employer, tick this box and don't put any other numbers on the form. And that way you won't end up trying to claim the credits twice on 2 different TD1 forms. There is a place also to put additional tax to be deducted. If you want to give your money to the government ahead of time and get it back later on, then there's a place for you to do that. Okay. And that would be that for the Nova Scotia TD1 form. We also have videos on the federal and the Ontario one.